On Thursday, the Fear and Greed Index for Bitcoin printed 12 out of 100. That is the same depth it reached during the FTX collapse in November 2022, when Sam Bankman-Fried's exchange imploded and forced liquidations cascaded across the entire crypto market. The difference this time is that no exchange has failed. No fraud has been exposed. Bitcoin simply fell. The broader equity market, meanwhile, did not collapse. The Dow Jones Industrial Average closed at a new record high, gaining over 500 points. United Health, UNH, surged 5% after Bank of America upgraded it to buy with a $450 price target. The S&P 500 held its ground, even as the Nasdaq slipped. The session was not a risk-off rout. It was a session where specific capital made specific choices about where to go next. Bitcoin opened near $63,500 after sliding below $62,000 the night before. That placed it below the lowest band on the Bitcoin rainbow chart, the fire sale floor that has only been breached twice in BTC's history, during the 2022 FTX crash and briefly in March 2026. By Thursday, spot Bitcoin ETFs had recorded $1.40 billion in net outflows in just the first 4 days of June, on top of $2.43 billion pulled in May. The ETF complex, which markets treat as the institutional adoption gauge, has now turned negative on the year. At the same time, the $45 billion Blackstone Private Credit Fund, BCRED, formally triggered its 5% withdrawal cap for the first time. Investors submitted redemption requests totaling 10% of net assets, roughly $4.5 billion. Blackstone honored only half. Last quarter, when requests hit 7.9%, Blackstone employees personally covered the excess from their own accounts, so the cap never formally activated. This quarter, no such backstop appeared. The gate held, and roughly $2.25 billion stayed locked. Across the private credit complex, the picture is consistent. Cliffwater's corporate lending fund received redemption requests for 17% of its shares and fulfilled only about one-third. Apollo, Ares, and KKR had all capped redemptions earlier in 2026. Partners Group gated its flagship private equity fund the day before BCRED disclosed its own cap. The Dow hit a record. Bitcoin hit a near-crash low. Private credit gates are activating across the industry. These are not random events running in parallel. They share the same capital pool. Strategy, MSTR, the world's largest corporate Bitcoin holder, sold 32 BTC last week for $2.5 million. The amount is 0.004% of its $53.8 billion Bitcoin treasury. By any arithmetic measure, it is immaterial. But MSTR stock fell 15% in 5 trading sessions, and Bitcoin fell more than 13% over the same period. The market's reaction to a 0.004% sale reveals the unstated premise that had been holding the Bitcoin bull narrative together, that strategy would never sell. Michael Saylor built the entire MSTR capital structure, convertible notes, preferred dividends, equity raises, around this signal that no sale was possible. When that signal broke, even symbolically, it forced holders to ask a question they had not previously needed to answer. What is the liquidation order when MSTR actually has to sell at scale? Saylor's own explanation for the broader Bitcoin weakness points elsewhere. He posted on X that capital markets are funding the AI build-out at historic scale, and that this is a capital rotation, not a Bitcoin impairment. The evidence he cited, more than $4.3 billion in BTC ETF outflows since May 14. Veteran investor Jeffrey Park, a Bitwise advisor, took the same position in a June 4 post, arguing that investors are rotating capital specifically into SpaceX and Anthropic ahead of their public debuts. SpaceX filed its S-1 on May 20, targeting $74.4 billion in proceeds at a $1.77 trillion valuation, the largest IPO in history, surpassing Saudi Aramco. Anthropic is eyeing a 2026 IPO at a reported $900 billion valuation, after posting $10.9 billion in revenue in Q2 alone. Goldman Sachs projects SpaceX's AI revenue will grow 100-fold by 2030 to $322 billion. These are not small opportunities being asked of capital markets. Here is where two competing premises diverge. Saylor's rotation thesis requires that the capital leaving Bitcoin is doing so temporarily, parked in cash or pre-IPO positioning, and set to return once the IPO frenzy resolves. The alternative premise, held by some positioned short, is that the SpaceX and Anthropic IPOs are permanently reclassifying what high-conviction speculative growth means for institutional allocators. Under this reading, Bitcoin's role as a treasury asset is being tested not by a bear market, but by the arrival of legitimately massive growth equities offering similar asymmetric upside with more auditable fundamentals. The Blackstone BCRED gate sits on the same capital transmission path. Tokenized versions of BCRED and Apollo's credit fund had attracted crypto-native capital over the past 2 years, investors who treated blockchain-accessible private credit as an alternative yield vehicle. When Bitcoin fell 13% in a week, those same investors needed liquidity. Private credit, tokenized or not, cannot provide it quickly. The illiquidity is in the loans themselves, not in how the fund is accessed. Two asset classes were hit simultaneously because the investor base that linked them had to choose which exit to use first. The instability in this read is not about whether the rotation thesis is correct. It is about whether the two competing premises, temporary displacement versus structural reclassification, can both survive the incoming verification event. The question from the previous layer has a concrete answer pending within days. SpaceX is expected to price its IPO around June 11, with trading under ticker SPCX set to begin on June 12th. If the capital that left Bitcoin and private credit over the past 3 weeks flows into SpaceX shares and then partially returns to Bitcoin in the weeks following, the rotation thesis survives. If that capital stays in public equities and accelerates toward the Anthropic IPO, with OpenAI reportedly preparing a confidential S-1 filing as early as Friday, the reclassification thesis becomes harder to dismiss. The Bitcoin Fear and Greed Index reading of 12 carries a specific historical pattern worth noting. The index has printed below 25 only a handful of times in Bitcoin's history, and each prior instance preceded a price recovery period within weeks. February 2026 saw the index touch an all-time low of 5 during a 52% drawdown from Bitcoin's $126,000 peak. That low preceded neither a prolonged collapse nor a swift recovery. It preceded 3 months of sideways price action while macro variables resolved. The Blackstone BCRED-S situation introduces a second verification point. New monthly commitments to BCRED have dropped to approximately $350 million in April and May, down sharply from prior periods. If inflows do not recover in Q3, the fund's net outflows, roughly 3% of NAV even after the 5% cap, will compound across multiple quarters. The loans on BCRED's books, some marked down more than 30 cents on the dollar, cannot be liquidated quickly. The mechanism creating the capital pressure on Bitcoin and the mechanism creating the capital pressure on private credit are structurally the same. Investors are leaving yield alternatives for growth equities, and the exit queues in those alternatives are longer than the investors expected. For the rotation thesis to hold, two observable conditions must be met. Bitcoin ETF net flows must return to positive within 2 weeks of the SpaceX IPO pricing, and BCRED's Q3 redemption requests must fall below the 5% cap without a new employee backstop. If both conditions are met, the read is temporary dislocation. If Bitcoin ETF outflows continue after June 12 and BCRED requests remain elevated, the reclassification read gains structural weight. The stronger lean is that this is a temporary rotation. The scale of institutional interest in SpaceX is well documented. JP Morgan's Jamie Dimon personally organized live events for 2,500 clients across 90 locations, and that kind of focused capital demand has a natural endpoint at pricing and first-day trading. But the lean carries a condition. It assumes the Anthropic and OpenAI IPO pipelines do not extend the reallocation period by months. If 3 consecutive mega IPOs hit the market from June through September, the recovery timeline for Bitcoin and private credit extends with each successive offer. What neither the rotation bulls nor the reallocation bears have priced is the scenario where the IPOs disappoint on debut. Because if SpaceX opens below $135 on June 12, the capital that rotated out of Bitcoin to participate does not automatically return. Ex post. Bitcoin Fear Index hit 12, same depth as the FTX crash, but no exchange failed. $4.3 billion left BTC ETFs since May 14, while SpaceX priced at $1.77 trillion and Anthropic eyes a $900 billion IPO. MSTR sold 32 BTC. If SPCX disappoints June 12, rotation capital has no obvious home. If it doesn't, BTC's 13% drop may have already been the cost of admission. Every day after the close, we publish a market wrap and key issue analysis. Subscribe to the channel.